All right, my friends, New York Times, Dateline, August 4th. As mortgage interest deduction vanishes, housing market offers a shrug. So let's dive into this because I've been saying for a long time with a TCJA, the Trump tax bill, that you're not getting mortgage interest deduction. Thus, you don't need to keep a mortgage in order to take a tax deduction because it ain't happening no more. And so here's Jim Tankersley and Ben Castleman. And look, man, I trust New York Times as far as I could kick them. But, I mean, there is some inherently nonpartisan stuff that does come from these guys on occasion. And this is one of these articles because it's so obvious. You can't make it partisan. I guess they probably could. Let's see. I'm sure they'll find a way to blame the Trumpster for it. Trump's tax bills encourage homeowners to stop deducting mortgage interest on their taxes. It didn't. It didn't encourage people, just said your standard deduction is too high. It just didn't say, hey, Josh, we're Trump's tax bill. You shouldn't deduct mortgage interest. It didn't do that. It just said your standard deduction between you and your better half are $24,000. You're not going to have enough mortgage interest in which to deduct it. All right, so Plainfield, Illinois, the mortgage interest deduction, a beloved tax rate break bound tightly to the American dream of homeownership, once seemed politically invincible. Then it nearly vanished in middle-class neighborhoods across the country and appears that hardly anyone's noticed. In places like Plainfield, a southwestern outpost in the area known locally as Chicagoland, the housing market is humming. The people selling and buying homes do not seem to care much that Trump's signature tax overhaul effectively vaporized a long-time source of government support for homeowners and housing prices. Yay, another reason that tax bill is so good. Why are we subsidizing rich people in their mortgages? It doesn't make sense. The 2000 law nearly doubled the standard deduction on federal income taxes, giving millions of households an incentive to stop claiming itemized deductions. Who's been telling you that? Your old buddy Josh right here. As a result, far fewer families, and in particular, far fewer middle-class families, are claiming the itemized deduction for mortgage interest. So let's see how they spin this as a tax hike on the middle class. What is the exact opposite? Because the standard deduction is much higher than your mortgage interest. I'm sure the New York Times will somehow try to find a way to blame the Trumpster. They hike taxes on the middle class. Let's see. In 2018, 1 in 5 taxpayers claimed the deduction, IRS statistics show. This year, the numbers fell to less than 1 in 10. In 2019, the numbers fell to less than 1 in 10. 8% in 2018, so there's a typo. In 2008, the tax year, okay, gotcha. In 2019, when you file your taxes for 2018. So 8% of total taxpayers who have homes filed for the mortgage interest deduction. That's nuts. And look at the vast majority of people who did are the rich people. Isn't that crazy? So Trumpster said, no, we're getting rid of that. And what you see here is the only people left who are filing for it are the people by income group who got the money. I got no problem with that. I just don't think you should have anything. You should have charitable deductions, mortgage interest deductions, no deductions for anything. That's all there is to it, man. Be done with all that stuff. Make it simple. The benefit as it remains is largely for higher earners, and more limited than it once was. In 2017, it capped the maximum value of new mortgage debt eligible for the deduction at $750, down from $1 million. There has been no audible public outcry. Why would there be? They increased the tax deductions, i.e. through standard deduction. Why would there be a public outcry? This is better for more people. Renters in particular, who the New York Times supposedly is worried, the people on the lower end. If the deductions decline should be causing a stir anywhere, it should be in Plainfield, where the typical family earns about $100K and a typical home sells for about $300. But housing professionals, home buyers and sellers, and detailed statistics about the housing market show no signs that the drop in the use of the tax break is weighing on prices or activity. From the perspective of selling and trying to buy, I don't see any evidence of that, says a guy who teaches PE and coaches football at the local high school. Mr. Forsyth and his wife Kylie are selling their 4-bedroom, 2-bath home on a quarter-acre lot in one of Plainfield's older developments, which dates 1997. They're moving with their 2 daughters to a nearby suburb close to the schools where they work. They have owned homes through the ups and downs of the local housing market, which boomed in the early 2000s and crashed in the middle of the financial crisis. Right now, says the 4th grade teacher, Miss Forsyth, people are excited the market is finally good again. Such reactions challenge a long-standing American political consensus. For decades, the mortgage interest deduction has been alternatively hailed as linchpin of support for homeownership by the real estate industry and reviled as a symbol of tax policy gone awry by economists. What pretty much everyone agreed on was as politically untouchable. It's politically untouchable if you got rid of it, but they didn't do that. They increased the standard deduction. Why is this so hard for the New York Times to understand? I know they're trying to turn it on as an anti-Trump screed, but they increased the standard deduction. You got more of a tax refund or less taxes owed because your standard deduction went up. Nearly 30 million tax filers wrote off a collective $273 billion in mortgage interest in 2018. Repealing the deduction, the conventional wisdom presumed, would effectively mean raising tax on millions of middle-class Americans. And if anyone were tempted to try, an army of real estate brokers, home builders, and developers, and their lobbyists, who were with Fannie Mae, and Republicans just as much as Democrats were at fault for Fannie Mae. Fannie Mae had these guys by the neck, and they paid them big bucks to pass legislation that was agreeable to Fannie Mae. Nuts. And their lobbyists were ready to rush to the deductions defense. Now critics of deductions feel emboldened. The rejoinder was always, but you'd never be able to get rid of the mortgage interest deduction, says an economist with the Brookings Institute and advisor to George H.W. Bush. It used to be that this was a middle-class birthright or something like that, but it's kind of hard to argue that when only 8% of the households are taking the deduction. And there's a Forsyth and their Plainfield home. All right. I don't know why they're selling a move. I mean, my goodness. Cost of selling and all that, it's a pain in the butt. Look, I've done it, I get it. Mr. Gale, like most economists on the left and right, have long argued the mortgage interest deduction violated every rule of good policymaking. It was regressive, benefiting wealthy families who are more likely to own homes and have bigger mortgages more than poorer ones. It distorted the housing market, encouraging Americans to buy the biggest home possible to take advantage of the deduction. Studies repeatedly found the deduction actually reduced homeownership rates by helping to inflate home prices. I agree with all that. So don't we say, yay, Trump. New York Times should say, yay, Trump. You're helping the lower and middle class people by keeping homes not inflated fake because of the mortgage interest deduction and not giving away the store to the rich people. So good job, Trump, says the New York Times. They're not going to say that, but that's what it should be. They're helping the middle class and lower middle class by giving them less taxable income and also making it harder for rich people to get mortgage deduction. Yay, but they're not going to say it. But the real estate industry said that scrapping the deduction could undermine the value of what for most Americans was their most important asset. In the debate over the tax law in 2017, the industry warned the legislation could cause housing prices to fall 10% or more. Well, it's all based on the interest rate, man. Price growth has cooled in many markets, including New York and Seattle. Well, those are rich places, but not nearly as much as the most alarming estimates suggested. No, the National Association of Realtors got something wrong. No, their economists didn't say in 2007 the market was still going strong and they didn't see any recession or anything. They got rid of that economist. Was that Zandy? That guy, Mark Zandy, was he with them? I can't remember, but their economist at NAR, National Association Realtors, was completely off. He was just talk about Pollyanna. That was that guy for sure, and he's no longer there. I don't know who it was. I think it might have been Mark Zandy from Moody's Analytics. Don't pay attention to that guy. That guy's nuts. Not a good economist. He's from the left, so he's always going to put his economic outlook on the favorable of the left and anti-right. So anyway, look, man. I mean, this is why I like my man for First Trust, Brian Westbury, because he was optimistic even in the midst of the Obama years, and he's not a left-wing economist at all. But he said, look, things are good, so that's why I like him. Places where a large share of middle-class taxpayers took the mortgage interest deduction, for instance, have not seen any meaningful difference in price increases from less effective areas, according to the New York Times. Skylar Olson, an economist at Zillow, said the slowdown in the housing market probably had little to do with the new tax law. Home prices have risen much faster than wages in recent years, creating an affordability crisis in many cities, especially the rich cities like New York and Seattle. Housing markets were burning so hot at an unsustainable pace they had to come down, said Ms. Olson. The tax law may have had another impact. It capped deductions for state and local taxes at $10,000, which had a particularly large effect in coastal cities and other places where property taxes and real estate values are both high. These places did see a slowdown in the growth of home prices after the law took effect, although it's not clear whether the two are linked. In fact, again, why should we subsidize the rich people? It doesn't make sense. And get rid of all of it, man. Just be done. No charitable deductions at all. Not even to the church. No more deductions. Just be done with it. I'm telling you, man, you want a good tax code, just get rid of all the deductions. Tax the endowments at these colleges. I mean, I'm telling you, man, they got so much money there, and they're not paying any kind of tax. Trump, again, he went after the rich people. The Harvard endowment is like 16 endowments that he taxed, and it's a small amount, but it's just a starter for sure. Tax those guys. Don't subsidize rich people in their houses. It's a wonderful middle class thing, and no matter what the New York Times tries to spin it, it's not going to spin it against what Trump did, which is make the law more favorable for the middle and lower middle class and less favorable for the wealthy. That's just all there is to it. And I hope whoever comes in after Trump realizes you can touch the third rail of tax policies and survive without question. And the endowments look large to me in terms of going after getting some tax revenue for sure, especially when they're violating people's civil rights. I read every day. There's a website called The College Fix, and they talk about all these men who are expelled from school just because someone accused them of something. A lot of black men too, and particularly. And Michigan State had to pay $750,000 to a guy they expelled because they said we had nothing to expel him on other than an accusation from some lady who says, oh. And then we have something going on in Wisconsin right now. The guy was kicked off the football team, expelled from school again from just insane accusations, which are completely fake. And I hope he sues. I hope he sues them big time and wins hundreds and hundreds of thousands of dollars because that's our money. So if I'm sitting there thinking, if you're sitting on billions of dollars in endowments, Wisconsin, Michigan State, Harvard, whatnot, from taxpayer money, why should taxpayer money go to pay when you violate civil rights of people? It doesn't make sense. So I hope they go after the endowments. I'm a fan of that for sure. Here is Lawrence Yun, the National Association of Realtors, the chief economist. Clearly, the housing market is underperforming in relation to economic fundamentals of job growth, wage growth, and mortgage rates. They will probably debate the law's impact for years. It is possible and even likely that sophisticated analysis will eventually conclude that limiting mortgage interest deduction did lead to a somewhat slower price growth. I agree with that. But it's a real price growth. It's not inflated, which is good. We don't want inflated growth that is backed by nothing but tax policy. So I'm all for it, man. But for most home buyers and sellers, those subtle effects will be washed away by forces that have a much bigger impact. Changes to mortgage rates, construction costs, supply and demand, trends from city to city and neighborhood to neighborhood. The tax law also rolled back the mortgage interest deduction in a way that minimized the chance that taxpayers would notice its absence. Congress did not take away the tax break. It just changed the law in a way that was meant for fewer people to benefit from it. Well, that's pretty much taking the tax break. All right, so that's all I want to say on this. I'm all for that, man. So there you go. The tax, only 8% take the mortgage interest deduction in 2018. That's fantastic. That's exactly what I was hoping to see with a new tax law, but 100% took the standard deduction. So a dropping the mortgage interest deduction, an increase in standard deduction. It's a win-win for the average taxpayer out there. So, all right, don't forget Spanish. We'll see you next time.